And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. This is the show where we bring you where the action is in the broader markets. And another mixed week here as we head into next week, holiday shortened period. So let's go ahead and get started. Take a look at what we will be covering today. As usual, we're going to take a look at those broader markets, see where we managed to close the week and what we can be on the lookout for going forward. And of course, that's a big focus of my show, is preparing you for not only what's taking shape now, but with an eye toward what we can anticipate going forward. We're also going to take a look at some of those top headline news that drove price action this week, a couple of pivotal, interesting items that took place. Also, earnings as the driver. And this has continued to be a theme throughout the last 6+ weeks. We'll get into those names this week that really pushed select areas higher. Also, buying the pullback after last week. Now, last week, of course, we had that CPI number that was lighter than anticipated on Thursday and really pushed the markets quite an explosive move higher. We also had midterm elections, and there were a lot of jockeying around among stocks. And I will point out to you names that pulled back and are setting up quite nicely at this point. Also, Thanksgiving stocks for your review. I think you'll get a kick out of that, but I'll share with you some food-related stocks as consumer staples were the top performing area this week. So let's go ahead and take a look at those headline news items. First up, we did get a secondary inflation report. This is after the last week's CPI. We did get the producer price index reporting, and it did come in lower than anticipated, pointing to a softening of inflation, and that helped boost stocks earlier in the week. I talked about earnings being a driver. Certainly, the most impactful names were Walmart, came out ahead of estimates, management guided higher, pushed Walmart as well as other retailers higher. The following day, Target came out with very weak numbers, and we had an opposite impact there. But I will share with you the net in that retail group as we close out the week here. Retail sales did jump in October, and that is not good news for the markets. We've talked about this in the past. The Federal Reserve is all about reducing consumer spending. As that remains elevated, inflation does as well. Layoffs, we did get the weekly employment numbers on Thursday. And interestingly, we are beginning to see layoffs rise. And this is something that the Fed wants to see. They want to see a contraction in the economy and certainly, most certainly in employment. We also did get leading index numbers today, down 0.8%. And there are those that are suggesting that we are already in a recession. All of this, I talked to quite a bit more in detail with my MEM Edge report, concise, not overly detailed, as it relates to where we are now and what to look out for as we see this dynamic continue and begin to take shape. Next week, it is going to be rather active given a holiday period. So you do want to at least put alerts on or keep at least one eye on the markets. Durable goods numbers will come out. PMI will also come out, the manufacturing PMI. That's been impactful in the past. Most importantly, will be Wednesday's release of the meeting notes from the Federal Reserve's last meeting. So keep your eye out for that as well. From here, let's go ahead and take a look at the broader markets. Here we are with a daily price chart of the S&P 500. And what we can see here is the markets are bound today or on track to end the day in a rather bullish fashion after experiencing a pullback and then closing potentially positive. We're not quite there at the close yet. But what I wanted you to key in on here is the position as we end the week. We are above this key green 10-day simple moving average. Good news there. And then your outside momentum indicators are positive, and that is your RSI and your stochastics. So net, despite a bumpy period this week, we are still in a near-term uptrend. So also from here, let's go ahead and take a look beyond the markets and look underneath the hood, see what these ETFs are up to. And this is going to be the 11 sectors within the S&P 500. I've gone ahead and added that relative strength indicator, and we're looking at a 2-month daily price chart view. And what we want to uncover here is where that outperformance is. You want to see where that strength is, ideally, so you can capitalize on that and participate in it. So up here in the forefront are your stronger areas. As we drill down, these are your weaker sectors. However, each of these are on the move. Of note is the fact that after the close last week, 85% of stocks were above their 50-day simple moving average. So we are seeing very, very compelling breadth within the markets. But let's take a look at this first group up here, XLI. This is the industrial sector. And we can see this nice break above each of these moving averages and in a very nice confirmed uptrend. This is one area, I would call it a stealth move, although I have been talking about it in my weekly show for several weeks now, as these companies are continuing to come in with very strong numbers, even within that transportation area, but also industrial materials and so forth. So from here, taking a look, I talked about Staples, the top performer this week, and in a nice uptrend. That's we'll take a look at some of those names there as we move forward. And let's go ahead and move down just a little bit, because we did see technology outperform the NASDAQ this week. This is XLK, down about a 1%, NASDAQ down about 1.5%, depending on where we close. But we want to keep our eye out because growth stocks have been able to make progress here, and it is selective, and there is a reason. I'll get into that as well as we move forward here. And also, we do want to be aware of those weaker areas. I talked about retail sales coming in above estimates, and then also those retailers that came in with higher numbers. However, the group is being held back. It's the worst performer, down 3%. An awful lot has to do with Amazon and Tesla that are just down for the count. So from here, other areas that I'm going to be discussing more again in my report, XLRE, XLU, these are areas that perform well when interest rates are declining. So let's go ahead, because we are starting to see a bit of rotation into those areas. I do want to move beyond those sectors and take a look at other areas that are highly impactful. I use ETFs to really embrace and get a sense of what is working and what's not. So again, that 2-month daily price chart view, strength to weakness. Many of you that watch my show, or certainly subscribers to my MEM Edge report, will know all about this dynamic. Biotech stocks continuing to remain in a nice uptrend. Lots of dynamics here, earnings, merger activity, new drug discoveries, and positive clinical trials are really driving the group higher, and it is very interesting, and we do have names that are selected from that area. So semiconductor stocks up here in the forefront, they had a very explosive move last week upon that CPI number, but also earnings driven as well. So what we can see is semiconductor stocks did pull back this week to their 10-day moving average. This was all about news from a major semiconductor company that is cutting back on production of their memory chips. But take a look, found support at this 10-day moving average, nice bounce upward, momentum in positive territory. And this is another area on my report. I've selected names that are participating in that nice downtrend reversal. From here, of course, we do want to also be aware of areas that are moving lower. I talked about interest rates, and let's take a look, because for the week, I'm going to pull up a weekly chart here. This is the yield on the 10-year Treasury, and you can see that it was flat for the week. However, overall, that trend is generally lower. We will be keeping a very close eye on this because lower interest rates are good, particularly for growth stocks and then other areas of the market. Let's take a look at another area down here in the weaker quartile, and that is the US dollar. And this is another area that is firming up just a little bit into the close. But of course, a falling dollar is also constructive for the broader markets. Another area that we want to be aware of is volatility. Today, we did have quite a bit in the way of options expiration activity, but this is the fear index, and it is derived by looking at options activity. And we can see it's remaining nice and low down here at that 23, 24 level. Of course, a rising VIX is talking and telling you that fear is increasing among investors, and it is a precursor to the markets falling. So we like to see this declining volatility index. Keep an eye on that. And then Brent crude oil is deteriorating here. Today's news all about China reducing their imports as it relates to oil. But there's been other activity and news this week impacting the price of oil, such as an oversupply. But what I will share with you, as long as we are here, is a view of XLE. That is the energy sector, and that is the bars here. What I want to point out to you, this thin line here is oil, the price of Brent crude. And this, of course, takes us back to the beginning of Russia's invasion of Ukraine. But more to the point is, if we go back to the beginning of this year, you can see how closely the XLE, which is the energy sector, tracks that price of oil. But as we move and progress, the synergy and that dynamic is reduced. We're not seeing as close of a relationship there. So despite this decline in oil, we did see energy stocks pull back this week, but not to the extent. So it'll be interesting to see if we regain that type of synergy. But at this time, I'm not finding it overly alarming that energy prices are pulling back. Let's go ahead back and take a look at our list here. If I can, that would be helpful. Yeah, so here we are taking a look at Brent crude oil prices, and then those other underlying areas in the broader markets. I did want to highlight here the NASDAQ composite and its price action because it is retaining a presence above this 50-day moving average, and that is constructive. We want to see that continue, allowing these moving averages to level out and then eventually trade higher with your momentum indicators in positive territory. So keeping a close eye, of course, on the NASDAQ because of those high growth names in there and their ability to really take off. One area in technology not faring well is software stocks, IGV ETF here, and we can see that it pulled back, but your momentum is still just barely clinging to that positive momentum in the positive territory. So from here, a couple of areas that I would like to take us to. I talked about earnings as a driver. So let's go ahead over and I'll share with you some of those names that had the most impact this week and what to be on the lookout for. Walmart is a name, as I mentioned, that came out with very strong numbers, very surprising for the markets because the day before that release, there was a pretty sharp pullback in Walmart. But when the names have these gaps up out of a base, so I'm going to go ahead and mark this up because it definitely bears a closer look. It is one of your strongest chart and base formations, and that is a gap up into a base breakout. Depending on, of course, the market backdrop, this type of price action, when it occurs on big volume and you get that momentum shift, that MACD black line up through the red, and you already had a positive RSI, it will often lead to ultimately to a higher high. So I do have other examples that we'll be taking a look at, but Walmart, The numbers did have a very good positive impact on the markets. However, the following day, we did hear Target not only come in well below estimates, but also guiding their earnings growth estimates lower. So here we can see quite the opposite. This name, Target, actually rallied into its earnings release and really, I think, exemplifies why it does not pay to buy stocks just before they're due to report. We had Walmart on our list, but it was on for a week and a half prior. But let's take a look. See this gap down here, huge volume. And we can see that we're kind of edging, clinging our way up to coming back to at least its prior price at the beginning of this week. I'm going to go ahead and share with you an intraday price chart. This is with an eye toward the ability or what to be on the lookout for when you experience these gaps down. This is a 15-minute price chart. I have a 5 and a 13 simple moving average. And as the price, in this case, Target, breaks above that 5 and 13 moving average, and you can marry it with positive momentum, you could conceivably have a short-term trade there. However, when you have that gap down in price, most times you are well served to move on, particularly because there are certainly a lot of other names that are in this retail space that are putting out good numbers and experiencing nice uptrends. Here we are with Gap. GPS is the ticker symbol. Nice rally going into earnings, and we can see this nice expansive move beyond. They also came in above estimates and guided higher. I don't believe everyone is convinced that the company is super sound. I'll share with you other companies that report it that are in a little bit of a better position. But here we are with this gap up price action today. Would not chase the stock because, again, it is overbought. We can see the RSI now up above 70. And from here, let's go ahead and take a look. I'll share just a couple of other names in here. Ross came out with good numbers today. Discount retailers overall. We talked about Walmart already. And here we are with Ross. Huge gap up into a base breakout. And this is what I mentioned as it relates to that bullish price formation. And actually, yeah, so we had that gap up. Nice positive momentum indicators there on Ross. And one last name that we can look at, because this is indicative of some of these other larger retailers that have been cutting back on store locations, cutting back on employees. This is Dillard's, DDS. They came out with numbers this week and had this nice uptrending period and are now pulling back. There are other areas outside of retail that came out very impactfully with good numbers and then impacted other names in that industry group. And Cisco is one of them. They came out after the close on Thursday, and take a look, that gap up, big volume, positive momentum here. So the stock is really on its way. We can see it now has broken up above that 200-day simple moving average with positive momentum. So from here, I always like to take a look at other names that are in that industry group that also look interesting, because this is what you'll see, a peer group spreading out. It's called an add-on, so that when those companies impactful such as Cisco come out with good numbers, you will see other companies begin to wake up, because in their report, Cisco is citing growth among networking needs. And here we are with JNPR, Juniper, a nice gap up into a base breakout, looking quite constructive. One last name that we can look at in this group, if you aren't convinced already, but this is Arista Networks, and they had their earnings back here at the end of October, gap up into a nice confirmed uptrend. So from here, I did mention to you the fact that we did see a number of areas that had pulled back last week or after last week's price action, and it could have been one of two things. What I'm going to share with you now are names that pulled back because the election last week did not come through with the red wave that was anticipated. And one area that was impacted very negatively were aerospace and defense stocks. And there was thinking without the Republican majority that we would not see a lot in the way of defense spending. So these names that had already come out with good numbers pulled back. So here we are with Northrop Grumman and OC. We can see this drop in the stock after the election results were beginning to be released. Pulled back, undercut this 50-day, and really you only need to go back to look historically and see that the stock has a predisposition to undercut that 50-day and come back from that. So we did experience that last week, super high volume. And then subsequent to that, this week, we are seeing a V-shaped recovery in the stock. I'll go ahead and share a couple of other names. I do live trading rooms throughout the week at Simpler Trading and was highlighting these earlier in the week. This is Heico, a little bit of a smaller name, but defense related. Here's that pullback, and we can see the nice recovery taking shape here. And again, these companies came out with strong numbers, and I anticipate a continuation rally there. One last name in that defense area is Lockheed Martin. They came out with great numbers back here, talked about a repurchase program, capital cuts in spending, and growth prospects into next year. Here we are with that midterm election-related pullback. Not quite as powerful, but we are seeing a nice recovery. The beauty here, when this pulled back, you can see that the momentum remained in positive territory, so you could easily have stayed with the stock. Another area that I did want to mention to you that is on the move as it relates to the uptick in retail sales and consumer spending, we are seeing payment processing stocks, and these guys already came out with their earnings as well. Here we are with Visa, a daily price chart, and we can see a little bit choppy here, but overall in a nice confirmed uptrend. We can take a quick look at MasterCard. Similar dynamics, but of the two, Visa does look a little bit stronger. And one area as well that I mentioned to you is the move into consumer staples. So what I'm going to do from here is share with you those names that are in consumer staples and are food related. Again, calling this my Thanksgiving segment. These are companies that have also come out with earnings and are faring well beyond that. So let's take a look at a couple of these stocks. In first, I will begin by sharing with you the consumer staples ETF. So here we are in a nice confirmed uptrend above each of its moving averages. And then this week, and in particular, most of this week's movement took shape with a nice gap up today with outside momentum indicators in positive territory. So let's take a look at a couple of companies that have already reported strong numbers. First up is Pepsi. I wrote about this after they reported their numbers here. This is taking us back to the mid part of October. So they did report over a month ago, and here's that gap up, big volume here, great numbers, and we can see that the stock was elevated to a new high here in price, and it has pulled back but is reinvigorating. So what I wanted to point out to you here is the fact that during this pullback period, your RSI remained in positive territory. So you can stay if you have the appetite in this environment to sit through this choppiness, because we are poised to trade higher with momentum potentially shifting. One other beverage company here that we can take a look at is Monster. Of course, this is the energy beverage company, MNST, a nice high yielder. I'm going to go ahead and pull up that full quote so you can get a good sense of what the yield is on this company. Actually, not so. But I'll keep that on because these other staples names do have a nice yield. But let's take a look at the price action here. The stock, upon the release of earnings, had this nice gap up, and I talked about that gap up into a base breakout on big volume, and sure enough, a little bit of a back and fill with the markets, but generally in a nice uptrend, finding support at that upward trending 10-day simple moving average. So from here, I will share with you again, beverages, that seems to be the name of the game, but Coca-Cola, KO, and we can see it has a nice 2.9% yield. We still have work to do here, however, not as strong as Pepsi and MNST, but it is breaking back above this 200-day simple moving average with positive momentum. From here, I did want to share with you other consumer staple stocks that are just beginning to potentially reverse. This is HRL, Hormel Foods, and another nice yielder, 2% yielder, up here above this 200-day simple moving average, positive momentum here. So in essence, the consumer staples group is on the move, but it is quite selective as it relates to those companies that are up above their simple moving average. Lancaster Colony, LANC, at 3.2% yielder, and then Spice Company MKC is on the move. It's reversing its downtrend, but still has work to do as it relates to potentially breaking above that moving average. So from here, I wanted to take a quick peek with you at the Dividend Aristocrats. And this is an area of the markets that continues to shape up. Investors on the lookout for nice yields. And then also with that, these companies, many of them have reported strong earnings. So we can look at KMB. This is another consumer staple name on the move, all about earnings growth due to loyalty and the need for their paper products. But first up here, I did have this RSI in descending order with these Aristocrat dividend. And essentially, these are companies that have increased their dividends at least over the past 25 plus years. So the top yielder is also the top performer. This is IBM, 5.5% yield. But let's take a look at this price action. Whew, what a nice downtrend reversal. This is all about that gap up on earnings. I will tell you, I missed it. But it was a company that I wrote about at the beginning of the year. The Money Show had asked me what I anticipated to be one of the best performers going into the end of the year. And I did pick IBM and then promptly looked the other way. But I will say it did have we can look at the weekly on this particular name. You'll see that it generally held up, but this sell-off was a lot. Also, while we're looking here at the weekly, there is still further upside potential. This MACD crossover, we're still in the lower range. If we go back to the mid part of 2021, you can see that that momentum shift upward can last for quite some time. So IBM still further upside, strong upside momentum. Let's take a look at some of these other Dividend Aristocrats. And I will share with you other areas that also are really on the move due to earnings. This is Expeditors. They are a transportation logistics company. And here's that gap up on earnings. Nice uptrend, pullback to the 10-day, poised for further upside. So in addition to those nice high improving yields, you also, what I am sharing with you are companies that are coming in with strong numbers. So ITW is another Dividend Aristocrat that is on the move after reporting strong numbers. So this is a really vibrant or fertile pond of area of stocks that you can take a closer look at. Walmart is in here. Caterpillar came out with great numbers, gapped up into an uptrend. So I did want to go ahead and share that with you. I will leave it with that. Everyone having fantastic Thanksgiving, and use that link below. This week's report is going to be all about what to be on the lookout for into the year end and how you can participate in the anticipated rally. Have a great weekend. See you next week.